Hey there. Good morning, everybody. It's just after 11 a.m. Central Standard Time here on Friday, the 28th of February, 2025. Before we get going here, do me a favor, hit the thumbs up, the like, the subscribe button, follow me wherever you happen to be seeing this at. Obviously, we simulcast across multiple different platforms. So do me a favor, do all that. Leave a comment, share the link, folks. I mean, it's not a lot to do, but it can definitely help this channel kind of get out there a little bit and have other people see it, which, gets people from most of what's out there, which is what? Just a bunch of emotional nonsense, a bunch of people who really don't understand how to read markets, don't really understand what's going on with markets. But even though some of them do, they're still very, very emotional. And some of those will do it because it gets your attention and it makes you watch them. But it doesn't help you any. It doesn't help you any to get you emotional, to get you riled up when emotions are what kill you in the markets, right? So just wanted to kind of say that today we're going to talk about, oh my God, everything, right? So we've had a down week with Bitcoin. We've had a down week with stocks. And if you're in the Trading Academy over there at TWC, you can get over. You can join us there at TexasWestCapital.com. Right now, still $97 a month. Haven't gotten around to raising that yet, but I'm going to raise that price anytime soon here. And if you're in at $97 a month, guys, you're going to be grandfathered in, and you're going to get to continue staying with that. Even when we raise the price, unless you miss a payment 1 month or decide you want to stop out for a month or something, then you'll have to come back in and pay at the, whatever the price is at that time. Okay. Mark says best $97 you can spend, homies. I appreciate you, Mark. So anyway, listen here, guys. What I'm trying to say is at the beginning, earlier this week, I do this market wrap every evening. And we kind of, really kind of look at the markets and what's going on and what charts maybe might be setting up for things that are, that are happening, what earnings might become, stuff like that, right? And so earlier this week, I said, look, we'll probably get continued stock index there, the pullbacks through the end of the week, but I believe we're going to have a rally next week, going to get a reversal next week. I said, depending on how it goes on Friday, we could start to see this, we could see like the start of that rally on Friday, but, at least probably next week that we would get that. And so that's what it's looking like. Bitcoin itself is hitting a target area that I've talked about. If you guys have been following me for any length of time, you've heard about me talking about a specific type of price action that happens with pivots. And so we'll talk about that here in a minute. In case you've never heard it, maybe you haven't been paying attention previously, or you're new with following me, you'll learn that, and it's bound to help you at least get some understanding of a little bit of market movement with some pivots. Okay. Let me see here. So we've got this pullback here with stocks. We got this pullback here with crypto. Got this pullback here with Bitcoin. Yeah, I'm going to separate that because Bitcoin really is different than the rest of it, right? We also got a pullback with gold as well, though, right? We got a little bounce with the DXY. So the dollar versus other currencies kind of bounced a little bit. But again, I still believe that the top is likely in there, and we will see the DXY continue lower. Now, why is that important? It's important because when the value of the dollar drops, it basically creates liquidity. All right. So when the dollar drops in value against the other currency, it creates liquidity, right? And as we all know, the global liquidity is what kind of really drives overall markets. It doesn't drive, like your daily, your intraday moves or whatever, but it determines whether price continues to rally or whether it doesn't, right? And so we've kind of hit that point. I had the chart up here, but it looks like I lost it. But there is a chart floating around here showing liquidity, global liquidity. And of course, it's a little bit ahead of Bitcoin itself, for instance. But it looks like the Bitcoin pullback has probably reached that area, that same area of that pullback of that liquidity. Now it's done so. Let's go ahead and jump here, guys. Let me see here. You call that a pullback? Crypto Twitter is witnessing Armageddon. It's a simple pullback. That's all it is. I mean, look at this, guys. Where do we get? So what I talked to our students about at the Trading Academy was there was 3 most likely scenarios if we were to break down below this January 13th swing low here. The one was just a sweep of the low and then a strong rally back up. The second one would be a target of this. I say it's the weekly pivot. Again, this is the yearly pivot. It shows up on the weekly and monthly time frame. So for new people, it's easier for me to say, okay, it's the weekly pivot, because then they know, okay, when they're looking at the weekly, that's the pivot I'm talking about. But anyway, that was the second one. And then the third one was kind of this retest of this like 70 to 74,000 area here, the previous all-time high area. Now, it makes a lot of sense to kind of hit this EQ here. You really can't see it. Let me see if I can maybe pull this out a little bit further here. Yeah, let's see if I can do more. Yeah, we can pull out a little bit more. And this is what we call a low volume node. Now, low volume nodes rarely get just jumped through like the first time. Usually you have to hit it multiple times before it goes through, whether it's down or whether it's up. Okay? And so usually what happens is when you're first testing it, you'll get a push down into the top or the middle area of it. And then usually you'll get a rally back up. Why? Because these low volume nodes are places where prices rallied quickly, where the market has just not been interested. There's not been a lot of, if we're going up here, there's just not a lot of selling coming into it. And so price moves quickly, leaves these low volume nodes versus these high volume nodes where you have a lot of activity. And now these nodes, each one of these little lines in here is a price level. And what it does is it tallies up all the volume, how many shares or how many, in this case, Bitcoin were traded at that price level on your chart that you have viewed here. So if you make the chart wider or shorter, that'll affect how your VRVP here. By the way, you can look that up here in the indicators. Just put VRVP. But that'll indicate how this shows here, right? So what you generally look for, if you're above a low volume node, you get a pullback to it, you generally expect to get a rejection out of it, not a push down through it. Now, that doesn't mean it's always does that. Again, nothing is guaranteed in trading other than you're going to lose money from time to time, no matter how long you've been trading, right? You're going to lose money. That's all there is to it. And the more you sit there and fight that idea, the worse off you're going to be. Now, the second guarantee, all right, that's the first guarantee. You're going to lose money at some point while you're trading. The second guarantee is the newer you are, the more money you're going to lose and the more often you're going to lose it, because you haven't learned how to trade yet. You haven't learned about markets yet. And you sure as heck haven't learned about proper risk management. And even once you do, you tend to not really take it too seriously at first. You use it when it's convenient to you, or you start using it and then you'll just ignore it. You'll be like, oh, well, I'm going to move my stop loss lower because price is going to go up and all those silly things, right? That's the only guarantees in trading, guys. And you go, but that sounds depressing, Chris. Well, it's not. It's a realization that trading is a game of losing. And basically, he who loses best wins. What does that mean? That means the person who does best with their risk management is going to come out the furthest ahead. Does that make sense? If it doesn't, think about what I said. Because what we tend to do as traders is we come in and we focus on the trade we're in, just that trade we're in, and we focus on the profit we can make if we're right, if it does what we think. But if we understand what I just said there, that means, especially the newer you are, the more you should expect yourself to be wrong. But even when you've been doing it 30 years, like me, you're still going to get it wrong. So when you understand that and you take that seriously, that forces you then to be to pay all the attention, a lot of your effort there on your risk management, on proper risk management. Proper risk management is the difference between you and the professionals out there, because the professionals use proper risk management. One of the worst things I ever heard. Remember, what was her name? Caroline or whatever from FTX Alameda. Remember that interview she did where she said, well, we don't use stop losses. What do you mean you don't use stop losses? And then we found out there were like $1.2 billion in the hole. That's what being stupid gets you. And yes, if you're not using stop losses, or some sort of stopping effect, some sort of, this is when I need to get out, right? If you're not doing that, you're stupid, right? Now I have to be clear. I have to clarify on that because like Fibbo, those of you that have, attended his threshold theory or a part of that, that he doesn't actually use stop losses, but he uses a stopping feature, right? Based on his system. It's the same thing. It's the same thing. It's just a bit more dynamic because of his system. But he has a feature in his system that says, listen, if this happens, you're done. Get out. I don't do that. I use, stop losses. But the other dumb thing that you guys are going to come across out there, and it's going to sound good to you because you don't know how to play stop losses, is you're going to hear people online sometimes saying, oh, well, stop losses are going to lose you money. If you go across anybody ever says that, just go the other freaking way. I guarantee you they are not a successful trader. They are not a consistently profitable trader. I guarantee it. If they ever say stop loss are going to lose you money. Because that means they don't understand what the stop loss is for. So I'm going to tell you this, and then we're going to talk about what's going on with the pivots here, and then we'll move on a bit more, okay? So what's going on? What's going on with your stop loss? People think that a stop loss is there to save you money. It does do that, but that is a secondary effect. The first thing and the most important thing that your stop loss is there for is it says, listen, at this point, whatever my narrative is in my head, whatever I thought price action was doing, it is no longer doing. I was wrong. That's what it does. And it tells you, well, if you're wrong, then you need to get out of the trade. If the trade is not doing what you thought it was going to do, the way you thought it was going to do it, and it comes back against you to hit your stop loss there, at that point, it's telling you, listen, whatever I thought was going on is wrong. I need to get out. Like I said, it's a secondary effect that saves you money. But if you're only focused on your stop loss as something to save you money, then you do silly things, stupid things, like you put your stop loss in stupid areas just because it makes your risk reward look better. If I put it down here, I only have a 2R, I can only earn twice what I risk. But if I put it way up here, well, now I have a 15R. That's a better trade. Well, no, that's a dumber trade because if that stop loss is not where it needs to really be, it's going to get hit. It doesn't matter that you had a 15R possibility. It's going to get hit and you're going to lose money. Okay? You have to understand this. A stop loss is there to tell you that whatever narrative you have, whatever you thought price action was going to do is not correct. And because it's no longer what you thought, you need to get out and reassess. And so you find that's the nearest area at which point closest to your entry is that definitely mean that you're no longer doing whatever you think it's doing. That doesn't mean just pick any place out of your rear end. It's gotta be logical. It has to make sense. But when you focus on the fact that it's telling you that you're wrong first, rather than it's, saving you money or it's you're contributing or detracting from your risk reward ratio, whenever you figure out the other part that's what it is first, it helps to keep you from being so emotional in your stop loss placement. Because a lot of y'all, that's what you do. You get out there when you're trading, right? And you don't like that if you put it below this area, then it's going to be like a 1.5 hour. It's only 1.5. Versus if you just put in some other cheeky place, it ends up being 10 or 15 or something like that, where you feel good about it because, oh my God, if I'm right, I'm going to make 10 or 15 times my risk. The problem is you're rarely going to be right with that stop loss being way up there like that. So you have to do the things as a trader that take as much um, as much force away from your emotions as you possibly can, because your emotions are going to be in there regardless. You're a human being. Part of being a human being is having emotions. That's part of it, right? Being a well-functioning, normal functioning human being, right? Because you can be a sociopath and then you don't have feelings, right? You don't have emotions. But this is the importance. And so you say, oh, but it's just semantics, Chris. But it's not just semantics. It's about helping you overcome your emotions. It's about helping you put in a structured plan so that your emotions take less of a toll on you. They're less strong in making you do the things you shouldn't be doing. Okay? Oh, I love that. Allison, what did you say here? It says, stop losses are proactive, which stops you from having to be emotionally reactive. Absolutely. I love that. It's a fantastic way to say it. Because guys, listen here, you can learn, every single one of you can learn any system out there. You can learn to trade. It's not difficult. It's basically rote memorization and then some practice. That's all it is. But if you don't understand the psychological side of it, if you don't understand how your emotions are leading to your losses, how your emotions are keeping you from locking in the profits that you should, how your emotions are keeping you from getting into a trade you should get into and forcing you into a trade that you shouldn't be in. If you don't understand all that, it does not matter how much memorization you've done of the rules of a system or a strategy. It'll never work consistently for you because your emotions will continue to come in and keep you from doing the things you need to do. This is the reality. Trading is not something you guys can come in one day and just go, oh, the next day I've got to figure it out. No, it's going to take some time just to figure out some sort of system or whatever that you're doing. But the much more difficult thing is working through the emotional side of it. Okay? So good morning to everybody that's saying good morning, man. Love y'all. Good to see you guys here. So I posted this even for y'all out there the other day, even if you're not in TWC with us. I posted this chart for you anyway, and I explained what we were looking for. You know, a sweep of the low. The secondary target is this pivot. Third target being this previous kind of all-time high resistance area here. And so right now we're getting a pretty decent reaction right now. Here's what I'm looking for the weekly candle. This is the weekly chart, okay? If this weekly candle can close back above this January 13th swing low, which on this is Bitcoin USDT Binance chart, but whatever your swing low is on this move here, in this case, it's 89,256 and 69 cents. If we can get a weekly close above that, then basically, let me draw it on here real quick. Then it effectively works as a spring on this range, or a terminal shakeout, maybe even a heavy spring. Depends how much volume comes in, you know, by the end of the trading day there on Sunday in a couple of days, okay? So for me, what I'm looking for is two things. I'm looking for one, a close back within this, what we call a megaphone pattern. That is the nickname for it, but it's a inverted symmetrical triangle. Because remember, symmetrical triangles look like this, right? And symmetrical triangles, when you're coming up from the low, right? You come up and you make your high to begin it, and then you're 3 waves down A, 3 waves up B, 3 waves down C, 3 waves up D, 3 waves down E, and then you break out, right? This is a proper triangle. Now, there's classical charting, which just says basically it looks like a triangle, and then you've got a 50-50 chance whether it's going to, you know, break up or break down. Elliott wave triangles are specific. They are 5 waves, 5 corrective waves, which means 3 wave movements, right? 5 corrective waves. A symmetrical triangle is lower highs and higher lows, and then it breaks out, and it's the last consolidation before the final move up of that current trend. Okay. Now, what we have here is the same thing, but it's an inverted, which makes it higher highs and lower lows. And so what you would get is you would get this. Okay, so it stops here, and so you've got your A, B, C, D, E. And then we look for the move up, okay? So this is the way I'm looking at it at the moment. And this right here would be a throw under of that triangle support, okay? To finish it up. Let me see here. So yeah, so if we can get a close, first of all, weekly close above this triangle support, I love that. That looks really good. This just looks like a throw under then of that support. Getting it above this 89,256 and 69 cents on this chart, a weekly close above that, obviously that's very significant. This was the previous swing low. Made this big move down, come up. And then what you'll have? You'll have this small body up here with this very large lower wick, which tells us demand is there and came in and should most likely lead to a rally back up. Now, based on the current height here, a pattern target based on the height here gives us about a 135, 123 target. Now, it's just something we do. It's basically, we use it with fourth waves in Elliot wave, but it's basically the same thing as a price action way that we use to get targets, right? And what you do is you just measure out your swing high to your swing low on your retracement fibs here, not your extension, your retracement fibs, right? And then you mark out the 1618, and that gives you a good general target. Price can go above that. It can also be below it. But when you're finishing up a pattern, it gives you an initial area to watch. And if you're doing Elliott wave, then you start counting your waves as they come up from the bottom and kind of get it figured out there. But right now, this is what I'm looking at. Now, here's what I'm going to tell you. Here's the thing. If you have followed me and haven't paid attention, or if you just started following me, you've never heard me say this, okay? I've got a lot of tips and tricks and techniques with pivots, okay? Here's one. And we can just take everything off here. We'll just strip it down. We came in sideways between the pivot and the R1 pivot. Now, we come in sideways and we range like this. It's going to do one of three things, okay? One is the range will sit here and then it'll rally up to the R1, then pull back to the range and then break out. Two is it'll go through here and it'll just start running wildly. Run right through the R1, continue up probably into the R2 or R3, pull back, then go, okay? But the other thing, if it's a bullish trend, the third thing it'll do is it'll dip down into the pivot, check it as support, and then rally and break out higher. Now, if it's bullish, those are the only two things, the only three things it'll do. So I'm always ready when we're coming in sideways like this with the idea that we could either go up to the R1 or we could break down to the pivot. Now, if that's the top and it's bearish, whatever, obviously it's going to fall through. Right? It is what it is. But right now, it's looking pretty good. And here's the other thing. We can jump in here. Not only are we on the discount side, this is the monthly fair value gap here. You see this? This is the monthly fair value gap. There's the EQ right there. So not only on the discount side of the monthly fair value gap, we're also just on the discount side of the daily fair value gap, which is within that larger monthly fair value gap. And right around that EQ, just beyond that EQ is where we hit. Right at the center of the low volume node. Big reaction. Boom, back up. On the daily, as far as volume goes, look at this. We are, for me, I've got another, well, we've got another 6.5 hours until market close, okay? Till the daily close. We've got this much volume. almost as much as this breakdown candle here, this candle that broke down through the swing low. We're almost there, which is similar to this volume on this big. I'm going to get rid of it. Let me put this back over there. Sorry, guys. Now that we're off that weekly. All right. This big, wick pop up here, which is just a little bit below this volume right here, which was our swing high up here. So what I'm saying is the volume coming in today, and if we continue to have things like we've already had them today, that volume is going to break out and probably be larger than this volume up here on the daily, which starts getting us pretty close to the overall largest daily volume, which was this, what do y'all call it? The Darth Maul candle here, right? So what's going on today in terms of volume and price action is very important. Right now, off a major, the pivot, the yearly pivot, discount side here in the in this monthly fair value gap. So probably around, is that around 70? Look at that. Right there at the 70.5. If you know, you know. Okay. Also, right just beyond the discount, just into the discount side of this daily fair value gap. So, I mean, there's a lot of really strong reasons why this is a low. Okay. Now, could it go down lower? Sure, it could go down lower. So the first thing we really need to see on a daily is we want to see a daily close above the previous swing high here, right? This 87.07846. Now, here's my thing. If I'm counting again, if you zoom in, you have 3 waves down. Then you have 3 waves up. Then you have 3 waves down. Then you have 3 waves up. And then you have 3 waves down. And so the way this works into 3 waves down here is you get an A, a B, and then 1, 2, 3, 4, 5 as a C. Okay? Then you have 1, 2, 3, 4, 5 here, right? You have your A, you have your B, 1, 2, 3, 4, 5. That's C. So that gives us a W, X, Y, which in Elliott wave is a double zigzag correction. All right. If we measure this out, you're going to notice, oops, got to get up there. You're going to notice that this low here, so usually when you have an ABC, a WXY, something like that, usually we look for the third wave, the C wave, the Y wave, to be 100 or 123.6, around that area of the first wave of wave A or wave W. In this case, we dipped just beyond the 123.6. So we've got 3 waves down, 3 waves up, and then 1, 2, 3, 4, 5 here, suggesting, oh, I'm sorry. Oh my gosh, wait a minute. Yeah. So ABC here, yeah. So, again, 5 waves down suggests that's the low there. So breaking out above this 1, 2, 3, 4, 5, this fourth wave here at 87.078.46, that's your first logical point that says, okay, a low may be in. That's what we're looking for here. Okay. By the way, we can also note we've been oversold for a few days here, well oversold on RSI. Stochastic RSI bouncing off oversold here, crossing bullishly, trying to anyway. As a matter of fact, I think this low for the low over here for this right here, RSI here back on Wednesday, that's the lowest it's been since basically August of 23. August 20, so almost getting near around a year and a half. That's the lowest that's been. And when we were here in August of 23, That was this point here. This was the first sideways we did. Remember the sideways here, and everybody swore to you it was going to break down. We were going to go down below 16 and 12 and 7 and all that. Instead, we got the breakout higher. So we haven't been this low on the daily RSI except for that point. So, again, minimally we're getting a bounce, but there's a lot here saying we've potentially got a reversal. By the way, if we're looking at this, let's say you're looking at this and you go, okay, well, 1, 2, 3, 4, and we're going for 5, and this is 1, 2, right? If you say this is 1 and 2, and you get your move out, you say, oh, they hit the 2618. That's the, usually a wave 3 is the 1618, secondary is the 200, third is the 2618. Well, if you're looking at that area and you're looking at the pullback on this, right? So if we're looking at this as a wave 4 megaphone pattern here, inverted symmetrical triangle, this is just the 38.2 pullback. That's our usual wave 4. If you got a wave 4, that's the first thing you look for is the 38.2 retracement. Secondary target is the 50%. Where's the 50%? Right there around 73, 74,000, which is our third target on that. So you go, oh my God, it's so bad. It's crashed so hard. And really, it's only come back 38.2, which is your usual, your normal wave 4 pullback. So if you go, well, geez, why isn't Chris getting all upset? Why isn't he freaking out like everybody else? Because this is why. Let me see here. Is it possible that big money is trying to make this look like the bull run's over, so they call us dumb money will scatter? I'm holding tight. Okay. So the way to explain this without going too much into this, again, we refer to Wyckoff, right? And Wyckoff is this idea that the composite operator, which is basically just what your big traders, your hedge funds, all the institutions are doing, right? They all kind of do it around the same areas generally. And so what we do is we go, well, here's our range, right? And we noticed, remember a few weeks back over here, I was talking about, that this was looking like a spring here because we did well on it. As far as volume, we were looking at the Bitcoin all-time index. But then I said that then there was all this volume coming in up here, which as you can see here, which suggests, we're pushing down here and we're not making any moves up, which suggests that supply is still strong here. And then we got this dip here. Again, a lot of volume coming in, demand showing up. You're like, okay, but we're not going anywhere. And I said, okay, so it's possible we could sweep that low. And what that would be in terms of what happens in ranges is if you're not getting enough of retail to sell out their supply in that range, as it's developing through it, you'll send it down harder on a breakdown to convince them that the top is in, so they'll sell out. And you'll just collect it up. Because remember, the idea is you have to get the supply out of your short-term holder hands. Now, online, you'll hear them referred to as weak hands or paper hands and all this. It's a derogatory comment. And sometimes a lot of people are like that. But it also refers to short-term traders. Because short-term traders are not going to buy here and hold for a move up. They're going to be trying to buy and sell along the way here. The problem with that is all that selling puts pressure on the upward movement, right? So when you're in the range, if it's an accumulation or reaccumulation range, the idea is to remove as much of that supply from those short-term holders into the longer-term hands, into your composite operator. So that way, as price finally moves up, there's just no supply to come in to really stop it, and it can continue to move up. So again, you got that right here, right? Boom, you got right here, boom, pulled up, pulled back, much lower, less volume than what you had here. Great test of this heavy supply, of this heavy spring here. Successful, rallies back up, right? Here, look what happens here. Look at all the volume that came out at the top here. What did it do? Sent it down. Volume picked up again, and then what? Took it back up. Same thing here, right? Sells up, had a little bit of volume. Overall volume wasn't much here comparatively. But, you had some volume up there at the top, so send it back down. Wasn't a lot of wanting to send it. Market was not really wanting to follow below. Composite operator sees that, sends it up, and it can move up now because you don't have all that supply coming in the shorter term hands to grab it, right? Same thing right here. Going through the range, you're rallying up here. Volume still coming in tough, still coming in strong here. Send it down. They sell out. You pick it up, send it back up, rally through. And so that's what we're kind of looking at. And so now we're seeing, is that same thing what's happening right here? And it's looking like it at the moment, as I was pointing out with this daily volume here. So rather than, oh my God, it's going down and it's down so much from the top, blah, blah, blah. Look at it. It's down 38.2. If you assume that this is a 1 and a 2 here, it's only down 38.2, which is a normal wave 4 pullback. Nothing in the least bit interesting about that. It is where you would normally look to get that pullback. Okay? Is praying and hoping for a pump part of a solid trading strategy? Well, Bernardo, you are with us and you know it's not. Praying and hoping is going to get you exactly what you really kind of know it's going to get you, which is not a lot of anything. Trading, praying, and hoping they don't make markets move, right? They don't. Let me see here. Hey, Chris, crypto miners have been in a large accumulation range since 2022, most of which are nowhere near previous all-time highs. Do you think they make new highs this Bitcoin cycle? I think some of them, yeah. Some of them have good chance. Yeah. And it seems like the ones that generally are doing best are the ones that have added a type of Bitcoin strategic reserve. Take it for what it's worth. I don't think all of them will. I don't think all of them will. We got, again, I cover them every week. I think we cover like 19 charts every week in the Bitcoin miner stocks report. And I update that every weekend. And some of them have done pretty decent. Others have really, really struggled a lot. And we've seen even earlier, last year, we saw a couple of them get bought up by other ones, get merged into them. So, but again, remember, Bitcoin miners are not Bitcoin, guys. That's the one thing you have to remember. Just like MicroStrategy and Coin are not Bitcoin, right? These are companies, which means they have other expenses and fees that, Bitcoin itself doesn't have, right? And they're much more likely to move, at least in the interim, knee-jerk reactions to, news events and whatnot. But, they have earnings and stuff like that they have to post. That's going to have on them as well. They got expenses, to compare against the revenue, whatnot, that they have to look at as well. Operational costs, all those things. So, it's a different asset class. So we have to be careful. I know a lot of people with the miners are like, well, why is Bitcoin going up and the miners aren't going up? Well, because Bitcoin and miners aren't the same thing. The same reason gold goes up and, junior miners don't go up, right? Or something like that, because it's a different asset class. Now, because it's not actually the gold, you're farming for the gold, right? So with the miners, the Bitcoin miners, not actually the Bitcoin, it's the farming for the Bitcoin. But that's why I think the ones that generally seem to be doing better are the ones that hold in some kind of Bitcoin reserve, Bitcoin strategic reserve, because that way, when people are looking at them, they start associating it more with Bitcoin, right? Think about MicroStrategy. MicroStrategy went from this intelligence kind of company, business intelligence company, to basically just a Bitcoin holding company. And I believe it's going to become a Bitcoin bank. I believe that's what his goal is. That's where he's kind of headed toward. And so, yeah, you have to be careful when you're kind of comparing there. But as far as the miners go, I do think probably some of them will hit a new all-time high, or a new high beyond the last cycle high. I don't think all of them will. So, you got to come watch. I like DGHI did pretty well recently. DigiHost did. Coors did a lot better than most of them for quite a while so far this past year. You know, 365 days. So yeah. Let me see here. Could it wick down to 73,000 for the previous highest, then close above the pivot and still be bullish? You talking about on the weekly? Sure. Yeah. As long as the weekly closes above, I say weekly, it's the freaking yearly, right? But I mean, this could spend the rest of the year coming down here on a big, like well, it would have to be a monthly candle or, you know, or I guess a yearly candle. But yeah, on your weekly candle, as long as it closes above that pivot, the pivotal is considered to have held. So even if, let's say this weekend, let's say we had a final flush this weekend down to, you know, down to 73 here, right? And then it caught a bit, boom, popped right up, just rallied its butt back up by the daily close on Sunday, and we're back above the pivot. Yeah, it will consider the pivot. The pivot will be considered to have held as support. So yeah, definitely possible on that. Let me see here. Sats, it would be an SFP. This would be a swing failure pattern on the weekly here. If we closed above this swing low, this is that January 13th swing low, which is 89,256 and 69 cents on here. Yeah, that would be a bullish SFP on that swing low there. Sure. Let me see here. Let me kind of get you. Is this likely to be an extended fifth wave? If this were to push up, it kind of depends on how you're counting here. This could either be the fifth or it could be the third of the fifth coming up here. The third of the fifth coming up there. But there is a good chance we could see this be a really strong oversized push much higher. But we'd have to do it, right? Right now we're just kind of guessing. We're saying maybe. But the possibility is there, yes. But right now we need to see the rally up off the low to do it, right? I mean, just because we got this here and everything I'm talking about doesn't mean it's guaranteed that the low is in. Like I said, we could still even dip down to 70 or 73 and still close the weekly candle there above that pivot and say, okay, the pivot held. You know. So yeah. Let me see here. Let's be honest. Several drives of weekly and monthly bear div across traditionals like ES and Bitcoin and Ethereum. Several drives of weekly and monthly bearish divs. I don't know what you're talking about there. Here's the weekly on Bitcoin. We had a bearish we didn't even have a bearish divergence at the highs. It was back over here. That's not even a proper divergence. And I know y'all want to be sloppy a lot of times because it's easier to be sloppy than to be exact. But let me tell you guys, if you don't know, if you're trying to do divergences, like let's say you said, oh, look, we got a higher high here and a lower high here. You try to say it's a bearish divergence. You have to align the price high and the oscillator high. And okay, it works okay here. What about here? No. The high is up here at this point. So technically, this is not a bearish divergence here. Now, you can still get the same effect, which we've got here on the push down. But if you want to be correct in your in the way in which you use the terminology, that's not a bearish divergence because the swing high for price is not the swing high for the RSI here. You had the swing high for the RSI first, then it dipped down, and then you got the swing high for the price. So it's not a bearish divergence. We had from, I don't know, I guess you could maybe look, see even here, this is not as well. Previous was this over here, right? So you guys got to be careful with your divergences when you're calling them that, because if you get sloppy in the way in which you approach them, you're going to get caught off guard a lot more often. Okay. Let me see here. We'll look at the monthly. No. There's no bearish divergence here. This high and this high right here. Well, let me see. Nope, slightly higher. We got higher highs here. We have higher highs here. There's no bearish divergence there. If you want to go from here to here, right? You do have a slightly lower one, but again, this is not actually the high here. The high is up higher. So you really wouldn't look at that as a bearish divergence on there. Now, one thing that is ugly here is this big bearish, potential bearish, well, the monthly, it's probably going to close as a bearish engulfing candle here. But what's the volume look like? It's bearishly engulfing this candle, but the volume isn't even at, so far, at last month's volume. When you're looking for bearish or bullish engulfing candles, you want the bearish or the bullish engulfing candle to have more volume, and preferably significantly more volume than the candle that it's engulfing. Otherwise, if you're just engulfing it with the candle but the volume's less, it doesn't mean the same thing. It's not the same as what you would expect. Do you see what I'm saying here, guys? A lot of what y'all learn for free online are half-truths and outright lies. And that's the problem. Because you don't know any better, right? You don't know. You don't have the experience and the education in the market to understand this. And by not understanding it, you get hung up wrongly, right? You might think something is a bearish or bullish divergence and then get confused when price doesn't go the way you think it's supposed to go because of that. But in reality, it wasn't really, right? Or you get a bullish or a bearish engulfing candle, and then price whips around and goes the other way, and you go, oh, it's just a failed bearish or bullish engulfing candle. But no, it wasn't even. It was a candle that was, that bearishly or bullishly engulfed another candle, but it wasn't that specific type of price action that you're looking for that includes the greater volume with it. And these are the things I consistently fight against online. I've been doing it for going on 8 years now, publicly here, guys, trying to fight against all these half-truths and outright lies that are out there online that you all kind of buy into. The only way I can say is, guys, listen, everybody's like, oh, I can do it for myself. I can do it for free. I can learn whatever, all the free stuff online. Guys, if that was the truth, wouldn't everybody be successful as a trader then? I mean, let's be honest. There's a reason it doesn't really work for most people. And part of that is what I'm saying here. Okay. Yeah, Reg, man. No, I appreciate you being so kind about that. I wasn't, again, Reg is saying I'm happy to be corrected. Appreciate the knowledge. And as you guys know that follow me, I'm not trying to obviously tear him down or anything. I'm just saying, no, here's the misunderstanding. Right? Because that's what this channel is all about. It's all about helping you guys understand the realities, right? The things that aren't clear online or often very muddled or really just half-truths out there. Because most of what you find online, guys, listen, people have found online that they can just copy stuff from other people and they can put their name on it and then they can market it better. But if you're copying incorrect information, you can sell it. Sure, you can sell it because you get good marketing and you can push on people's emotions, because that's why we buy. It's based on emotions. We don't buy logically. We can all lie to ourselves about it, but we'll come in with we'll try to come in with a logical reason later, but everything we spend money on in life is emotional. But that's how they do it. And they just regurgitate a lot of really poor information, but you don't know any better because we don't know what we don't know in life. And a lot of times, if it sounds like what we think it should sound like, it just makes us even more confident that we're right. And that's awful because we want to make money, right? That's why we're in the markets. We want to make money. If not, why the hell are you in the market? So I think it's going to be an ugly close on the monthly. But I think the volume will be just around what the previous month's volume was. If for some weird reason we get some, I don't know, some bite in the butt and this thing pops up there, I mean, if it was to close at this level here, this 93,576 level, that would be insane. But that's got to go up, 10,000 from where we're at. I don't really believe that's going to happen, but it could. We've had very large movements before, but I don't think it's going to happen here in the next 6 hours exactly, right? But if it does and we got that close, y'all better be really bullish. Get that close up there. But thankfully, we don't need that, right? We don't need that because, things are not set as we normally expect. Now, does that mean that price can't go down further? No, it doesn't mean that at all. But what it means is when we look for a bearish engulfing candle, what we look is for the candle to bearishly engulf the previous candle and to do it on greater volume. And not just like a little bit. We really want to see a strong extra bit of volume. Like it's confidence, right? It's confirming it. It's like, that's it. That's what we're looking for. We're not looking for this muddle like, maybe. Because that's how we should treat it if we ever see it like that. Let me see here. What's going on there? Sarang says, do you think we will get a correction in May again like the last few years? It's interesting. I think May looks like it's really setting up as a good month up. So yeah, we could see May, June, a correction May, June, wherever it lasts through the summer, and then we get our final push up the last few months of the year, the last quarter of the year. I could definitely see that. And so for us, if that's the case, remember we were talking about what the count could be here? Is this going to be an overextended 5? And I said, well, it could be, 5. I said 3 of 5. It could be 5 of 3 is what I meant, right? So, we'd have one more push up here, and maybe that would be through March and April. And then into May, we get the wave 3. We pull back for wave 4 through the summer. And then wave 5 is Q4 of next year. And that would kind of fall in a line with what we normally get with the markets, right? So I think that's very, very much a possibility. But we'll have to see how this continues to play out here. But yeah, if we can get a March and April rally up from potentially this low here, that would really set off great for the next few months, and then set a pullback that probably comes back to, this area here, maybe, something like that. What is the R2 pivot sitting at? I'll tell you exactly here. 149,959.33 on there. Yeah, that's the R2 there. So yeah, when we look at this, we go, where's our target? I mean, again, we're looking at that 135 target, and that's just based off the height here. And if it overextends a bit, we can hit 135 to 150, and then we pull back 50 to 90 or 100,000, right back into this range here. Or hell, we even pull down to this, and this would, here's the thing that would tear everybody else up, okay? Here's where it would tear people up. Let's say this is the 4, and then we're getting the 5 of 3 here, okay? And let's say we hit 135 to 150,000 here, okay? Now, here's the thing. On the pullback, if it breaks 100, people will be wigging out. That's the top. That's the top. I told you it's the top. They're going to be telling you it's the top all the way down. But often what we get is a wave 4 into wave 4 of the lesser degree. Okay? So if we look at this as 1, 2, and then maybe this is 1, 2, 3, 4, 5, and that gets us our 3, right? So again, like we did here, pulling it back, and we say, oh, it's only the 38.2, where we kind of pulled down to, right? We do the same thing. We see if we had our pattern target and pull back, that would be right around a 38.2 pullback, a 4th wave pullback from 135.5 or so would be about 70,851. If we get the push up into maybe 150,000, 149,000 up there at that R2 pivot, it's at 75,846. You're pulling back. Now, it doesn't have to hit the 38.2. It can sometimes stop a little bit short. But often what you get is you get the larger degree wave 4 pulls back around the low of the interior wave 4 of the previous wave. So again, if we were to say this is 1, 2, and say maybe 3, 4, and then we'll get that 5 up there, right? And so if we're looking at this as the 4 here before the 5, well, this wave 4 should pull back down toward this low area, right? And so from, let's say 150, let's say we get this stretch to 150 to that 75 area, right? That gives us then a final wave 5 without overextending, just a pattern target at 228.9. Now, I'm not saying it's definitely what's going to happen here. We have to watch how things continue to play out here. But this, I'm trying to teach you this, guys. It's just a real quick, simple concept from Elliot Wave that helps you understand that pullbacks are structured. And it's a 38.2, because normally if you don't think about it, you're like, oh, 38.2, that's so much, it's so big a pullback, 50%, such a big pullback. But if you understand Elliott Wave, then you know that on a wave 4, 38.2 and then 50%, those are your two targets every time, every single time. Those are your two targets you use when you're trying to figure out where is wave 4 going to go from the top of wave 3. I mean, it's just every day. So when you think of price now, see what I'm doing? When you think of price, the price action in terms of the structure, right? That pullback in terms of the structure, rather than the pullback in terms of, oh my God, it's pulled back 30% or 50%. Do you see how you get a much more realistic understanding of what's going on? This goes back to what I was talking about at the beginning of the episode here, where I said that if you're focusing on your profit on the trade, right, rather than your risk management and the system, then you're likely to lose a lot more because you're focusing on the wrong thing, because the game itself is about losing. It's about making sure that you lose as little as possible. Okay? Let me see here. Bamboo said, Chris, just check the DXY futures since the yearly was engulfing. And as you said, volume is at same height like 2023. So looking good that the engulfing might fail. Yeah. I think it's going to. Did you mean the yearly or did you mean the monthly on that? Well, let me go and jump in some other things here real quick, guys. Here's others. This is the chart I'm still looking at with others here. This is everything outside of the top 10. Okay, so this is your alts outside the top 10. Again, basically, it looks like we have a 1. It looks like we have an A, B, C as a W, and then A, B, C, D, E as a triangle for X, and then an A, B, C here for Y. Again, we swept the low here, bullish SFP, rallied right back up into this area where we've been holding. Looking for this to rally up. If we can break out above the 276.76 billion, I think is what it is here. Yeah, 27676. If we can pop out above that, that's going to add confidence to this. That gives us a minimum expected wave 3 up here at around 359.68 billion, which gets us 5 waves up around 403.65 billion, which gives us 5 waves up near the previous swing high. And that's without overextending anywhere. It could overextend along the way. So alts look like they may be putting in a low. So again, and a lot of your charts are going to look something like this, right? Here's DOT. Look what DOT did. Big move up, A down, B up here, and 3 down for C. They look like flat corrections or expanded flat corrections in the form of WXY, double zigzags here. So on DOT here, if we're breaking out above 5.341, that should add confidence to the count, gives us a minimum expected wave 3 target at 6.528. But again, it looks like this on a lot of them, right? Here's KDA USDT. Again, we had the big strong move down, the rally back up. A, B, C, D, E. B is a triangle. C is down. We're at the EQ of this daily demand structure here. Rallied up, pulled back like that was here, rally back up where we're finding all this support back in the range here. So breaking out above triangle resistance here at 0.5692 is going to add confidence to the count. That gives us a minimum expected wave 3 target at 0.8844. So I'm showing this to you guys because there's so many of them, and you guys can look at them and you'll find the same or a very similar setup. You're looking for that 3-wave pullback with a higher low. You're looking to get above, above that kind of that move out, right? Looking to get above that. But I can't possibly look at all of them here, but I want to show you a couple of different variations of that. So you guys can look through your charts and go, well, which ones are you interested in? And saying, okay, is it looking the same way? Then really, I just got to kind of get through this topish area. Just got to get through a topish area of whatever I'm looking at. And then I can go long. And anybody can grab your extension tool, click it at the bottom, click it on the move up, and then click it on the low on the pullback there. And then you look up here for that 1618 as your initial target. Okay. Now, some are going to be a little bit different. Some are not going to look exactly like that, but most of your alts will. That's my point. Or a very large, significant portion of them, it looks like, are looking similar to these ways. Okay. If we look here, IWM, this is the small caps here. Right now, we're looking at this as A, and then B. Oh, I'm sorry, ABC is W, and then X, and then AB. And it looks like we're trying to finish out C here. Oversold. Bottomed out here and oversold, bounced right there. We've pulled back almost 70.5. We're right here in the low volume node. I like this area. I like what we're getting in the lineup here. So it's either down or probably pretty close to it. Next target would be that 209 area. And then 206 would be our two targets to the downside. But looking for a breakout above 230.70 to indicate that wave 2 is likely complete. Add confidence to the account. Say wave 3 is in progress, headed up higher. These are the small caps. This is the Russell 2000 ETF here, small cap ETF, IWM. You can get the futures with RTY, 1 exclamation point. So right there, Russell 2000, E-minis. Okay. So however you want to trade it there, or if you just want to watch it, it's looking pretty good as well. I've got Tesla here. Tesla, I've still got this as a wave 4. It looks like a deep wave 4, basically bouncing around the 70.5. But again, it's right here at the low volume node. It's right here at the previous resistance support. It hasn't broken down into wave 1. We've got a large triangle over here for wave 4. Okay. So if we were to break down, if we were to break out, we've already broken out above wave 3. We would have to break down below wave E of 4 here at 182 to signal that this is probably wave 5 complete here. Because we've already broken out above wave 3. So if we break down below wave 4, that says that that move up is complete, right? But right now, looking decent on this. And we've got this big expansion into contraction here, which I love to see. Because usually it gets us a reversal. RSI overbought, stochastic RSI, bottomed out and overbought, curled back up. Again, this goes with what I was telling our students earlier this week, that we would probably see stocks continue to pull back into Friday and then probably rally next week, or could potentially rally today, depending on how hard the earlier part of the day drop was, and kick off that rally before next week. So I would watch these. I would watch, coin, strategy. I keep saying MicroStrategy. Strategy now. Tesla. I would watch these. Technology got routed big yesterday. The S&P technology sector index there was down, or ETF was down something like 3.5%. And we had at the top of that really big ones like, let me see. Do I still have it up here? Let me see if I still have it up here. Yeah, technology was down like 3.64% yesterday for the S&P. So like SMCI Supermicro Computer was down 15.97%. First Solar, FSLR, was down just under 10%. Monolithic Power Systems, MPWR, was down 9.26%. NVIDIA was down 8.48%. Broadcom, which is AVGO, AVGO, was down 7.11%. Man, if you're looking for something to buy at the beginning of next week, I would pay attention to those that really took a hit yesterday. They were down huge. It doesn't mean they're going to go up on Monday, but with those big, huge moves down, big sharp moves down, that usually sets up, a reversal. Even Dell was down yesterday, 6.76%. So again, just kind of understanding what's going on is going to help you out a whole lot. Let me see here. Yeah, so again, we kind of sit here and go, okay, so now we just need to see what goes on with, look at this. That's an absolutely beautiful candle right now. Huge lower wick, demand clearly coming in. Still got 5 hours and 45 minutes. This could turn into, it could close higher on the day, which would be really bullish, right? Look at the volume associated with it again, coming in there. Very good volume. 12 hours just getting going now. 12-hour printed bullish divergence off these two lows here. Off the early morning low there on the 26th and this current low. You see right here. If you're not looking at higher time frames before you trade your lower time frames, you're really just screwing yourself over. You really are. You've got to make sure you understand what's going on the higher time frames. Even if you're trading the lower time frames, because you're gonna miss things if you don't. You're gonna miss things if you don't. Like right here, had you been watching this, right? Let me see here. If you had seen this on the 12-hour here, you potentially could have gone long here around 80,500. And you'd be up over $3,000, right? The price of a rally over $3,000 for you right now. But yeah, that daily, I like to look at that daily candle so far. We'll see how it plays out there. Revi, what's up? Says lots of indicators flashing mega bullish on the 4-hour. Yeah. Yeah, it's looking pretty good. I was cautious this morning on the 15-minute because the 15-minute got stochastic RSI, ran up pretty high pretty quick. Even RSI did, without price really moving what I would have thought it would have needed to. But it continued to push up. And sometimes we get that. Sometimes we get that good grind and it just keeps on pressing. Okay? Kimasabi says the rule of thumb for me is to analyze the 4-hour and above for the setup and only go to lower time frame for entry. It's how every last one of y'all should be trading. This is something I teach week after week at our academy. That is one of the biggest things you can do for yourself. Figure out on your high time frames, your daily, your 4-hour, figure out where the points of interest are, where the areas of interest, where your levels of interest are, where something significant should likely happen, where you should get a reaction. And when you hit those levels, then you zoom into a small time frame, like a 15-minute, to look for your entry. Now, you have to understand what you're doing to enter. You don't just blindly enter, right? And we teach techniques with price action and whatnot that you can use. But that's the way every one of y'all should be trading. But the way that most of y'all end up trading is that you zoom in, like on the 15-minute, you're trying to find something the minute you're on the trade, on the app, right? Correct me if I'm wrong, but that's the way most of us do that, right? As traders, as retail traders, we tend to we're like, oh, I got 10 minutes here. I can jump on, or I got lunch here, 30-minute lunch. I can jump on the phone app and try to find something I can get in, right? What you should be doing is you should be marking the levels out on the larger time frames with the alerts. Just let the alerts hit you, and when they hit you, as soon as you can after that, then you get in and you look and you zoom into that much smaller time frame. But then you have to look for the setup on the smaller time frame. But if you can get that setup on the smaller time frame at that reactionary area on the larger time frame, you're all but guaranteed to have a successful trade. Okay. Let me see here. Revy says VMC Cypher B. I'm not sure what that is. I guess it's some sort of indicator. Flashing double gold buy dot. Last time it flashed a signal one was January 23rd of 2024. Well, as long as price went up after that, then that's a good signal. So yeah, this is kind of where this is why I'm not freaking out. This is why I'm not worried, guys. So pivot's doing their job, right? The last two times, we had our lows and everybody thought they were going to go crashing forever down low and whatever. Let me see if I can put them in here. Was the daily S1 pivots. You guys might remember me talking about them. Yeah, we do this right here. Like right here, right at the daily S1. Oops, let me see over here. Let me see if we got it over here. Yep, right here, the daily S1. Well, it was right here and dipped below it and then took off. But that daily S1 was basically the low there. Was the low here. It dipped below it here, but closed up back around it here as well. And then so here wasn't the daily though, but it was, the one showing up on the daily, but it was the one showing up there on the weekly and the monthly there. The yearly pivot is doing the job right here. I'm telling you guys, if you don't understand pivots, man, it's one of the easiest things you can do as a new trader or a not yet consistently profitable trader to increase your profitability. Is to learn pivots. I actually put together a course for that. If anybody wants to jump on that, you can get that over at texaswestcapital.com, or you can go over to members.texaswestcapital.com and you can find a link in there right on that page with it. If that's all you wanted to get, I think you can get it from there. You have to let me know if you can't. But yeah, I put that together because I spent a couple of years from like 2009-ish to 2011-ish. And that's all I did was I traded pivots. That was it that entire time. And what it did was it helped me understand how price action moves through pivots and how it moves with things like Wyckoff, like Elliot wave, with moving averages, stuff like that. And I talk about a lot of that in that course. But one of the things that I talk about then that I taught you all here today is this kind of idea where you're moving in sideways between the R1 and the pivot. And if you're bullish, there's three things it's going to do. It will. I don't know the last time that I can ever remember that it was sideways here, rallied up the R1, and then dropped all the way to the pivot. Almost exclusively, you'll just get a pull back into the support here, and then it'll go. Or again, it'll just go straight up because there's so much demand. Or you do the sideways, then you'll drop to the pivot as support, and then you'll turn around and rally back up. And that's just, again, that's another thing that I learned during that time. And I've talked about it so many times over the years here on the show. So again, those of you that have been following me for a while and attending the shows, you've heard me say it probably ad nauseum. And it works on any time frame, guys. It works on it. In the same idea, if you're moving in between the pivot and the S1 pivot, the first support pivot. Could either drop to the S1 pivot, ride the pivot, get rejected and follow lower, or could just be really bearish and just drop straight through it, or it'll go up to the pivot, get rejected, and then continue down. Again, if it's a bearish move down. So yeah. So just some things to think about there. I think that's going to do it here, guys. I just wanted to kind of really get in here because at the end of the days, guys, I'm a technical analyst. That's what I do. Now there's various different kinds of technical analysis out there. Peter Brandt is clearly just a classical chartist. It is a way to trade and it can be profitable. You can do all right with it, but understand it's a much more clunky way to trade, right? And it's clunky because you're trading based on possibilities and not probabilities. When you start learning things properly, and I didn't just say when you start learning things, but when you learn them properly, when you learn Elliot wave properly, or you learn Wyckoff properly, you can then start trading probabilities rather than possibilities. And you have a lot greater chance for success with that. But it's not going to happen overnight. It's nothing you're going to learn tomorrow. And in fact, you can learn it from just about anywhere, from just about anyone. We teach it. But we teach it as part of the bigger understanding. We teach them as tools to help you understand how and why markets move the way they do, how to identify that movement, and how to forecast price action. So you don't get wigged out, freaking out like everybody else about this, talking about it's the top, it's the top. I have the same few people that have been bearish on Bitcoin for 2 years now. 2 years. Still commenting under my posts about how every time it drops, it's a dead cat bounce. And then they're wrong over and over and over again. Or that the top's in. And then they're wrong over and over again. But they continue to put. I don't get that. I don't get why you would come off so smug and so whatever about it after you've been consistently wrong for years now, like it means anything, right? I mean, I guess if you say something long enough, eventually you're going to get it right. But at that point, nobody cares about you. You didn't. You were wrong for the years leading up to it. You missed all that upside, right? But you don't want to be one of those guys, right? You want to be more calm and collected in the market. You don't want to be all freaking out and fearful and oh my God and sky is falling and oh my God, the minute it breaks us one level, we're going way down here without even taking into consideration the other levels prior, right? You don't want to be that way. You want to understand that there is a form and a function to the way in which price action moves. It's not random. Okay? Because human beings aren't random. Human beings are structured. We move in our head. We have a neutral area and we move above and below, but we always kind of come back to that neutral area unless something's, chemically imbalanced in our brain, right? But if it isn't, we'll always move back and forth between that. And it's predictable. It's predictable. And those emotions come out in the charts. That's why usually we'll hold on a drop, right? We'll hold and hold and hold and hold, and then we'll sell. And then it turns around and goes right back up, right? We're almost always guaranteed at that point where we feel like we can't hold anymore and it's going to go down and we sell. That's likely to be the bottom area. Because again, we move pretty predictably in our states, our state of mind off that neutral. And so, price action is that. Everybody says, oh, but price action is, so much of it is algorithms these days. Yes, but those algorithms are based on that. Everything I teach is based on that. It's based on understanding human emotion. It's based on understanding human psychology, about market psychology, right? See, I'm fortunate. I've had 30 years in the markets, all the markets, right? But I also have a master's degree in psychology. It's one of those degrees that I have. And so, it helped me even more so apply and understand what I've learned throughout the years in how we look at the market. So I don't get freaked out. I don't get worried. I've got a plan. There's always a plan. You should always have a plan. If your money's in play, you should have a plan. Does that make sense? Should always. So anyway, hopefully this helps you guys out a bit. Hopefully, if you've been really emotional, hopefully you're not as emotional now. Even if you don't understand exactly everything I've said, hopefully you understand that, okay, there is some structure to this and things that happen. And the last thing that I want to be is I don't want to be emotional in the markets because that's going to lose me money. And then from there, you got to figure it out though, guys. You can't wing it. You're not going to make any money winging it. And you're going to make very little money just trying to go off the free stuff out there. I'm going to be honest with you. I said it earlier. If the free stuff was so effective and so useful as it is, everybody be rich, wouldn't they? Everybody be winning in the stock market, right? In the Bitcoin market, in the crypto market, the futures market, right? But they're not. There's a reason for that. Anyway, hey, listen, I hope you guys really have a great day. I hope you have a fantastic weekend. We'll look and see. If we get that rally starting next week that I was talking about. with stocks and maybe even Bitcoin theory. Now, again, it's possible Bitcoin could drop further. We have no confirmation yet that the low is in. I love the area. I love everything that's loading up. To me, it looks like it very well likely could be in. But as I talked about earlier, there's some levels that I'd like to see kind of closed out there to really add confidence to that. But if we get them, there's absolutely no reason you should think about being bearish anymore. Good news is there's still a lot of upside. So even if you didn't grab this low today, you've got the opportunity on pullbacks if you want to do that, right? All right. Y'all trade safe. Remember, the only thing you control is how much you lose. So please keep working on that risk management. Thank you so much for, spending your time with me here. I hope it's been helpful, insightful, enlightening a bit. Yeah, if you're in TWC, I'll see you guys over there in just a bit. I'm going to grab me some lunch. But other than that, you guys have a great day, a great weekend. Trade safe. And don't forget to show up next Wednesday for Beards and Bitcoin with myself, Andrew, and Tillman there from Arch Public. And we'll kind of do our thing with our Bitcoin information for you guys and our TradFi knowledge and all that fun stuff, and kind of let you guys know what we're seeing as far as that goes. All right. All right. Y'all take care, and I'll see you then. Goodbye, everybody.